Hi there. I'm Holly McDonald with the Costa Mesa Pod, where we discuss all things concerning the lifestyle, businesses, and activities that make Costa Mesa and our area such a great place to live. Today I'm with Jason Thibodeau of JMJ Financial. Hey, Jason.
Hey, hello, Costa Mesa residents.
Thanks for being here.
Yeah, happy to be here. Thanks for having me.
Sure, of course. So Jason is one of the owners of JMJ Financial, a great lender. I've worked with them many times over the years. And we're here to find out a little bit more about Jason's story.
Yeah.
So, Jason, how did you get into this whole business of lending?
Yeah, and grateful to be on and grateful for your business and support. Thank you, Holly. Nobody chooses into a mortgage, right? I didn't know what I was doing as a 20-year-old kid. My wife, we got married really young, 20 years old. And my wife's parents just so happened to own a mortgage brokerage at that time. This was during the subprime era.
Yeah.
So if you're old enough, you know that that was an entirely different marketplace than what we're experiencing today. And it didn't have a good ending, right?
Yeah.
So for 4 years, from 20 to 24 years old, I did that, but I was too young. I didn't really know what I was doing.
Yeah, at 20 to be helping people with their financial investments.
Right. All I knew is I needed to figure out how to pay my rent.
Yeah,
right?
totally.
Mm-hmm. Or what's health insurance? Why do I need it? Like you're a child basically still.
Yeah.
So that first 4 years was pretty much a lot of hard knocks of trying to figure out who the heck I was as a human being, how to make a living, how to be married.
Yeah.
Trial by fire. And then, of course, 2008 hits. The real estate market melts down in the most significant way since the Great Depression.
Yeah.
And that was sort of a come to Jesus moment for me where I was like, well, what am I going to do now?
Yeah, did you literally just lose your job overnight or what happened?
Yeah, basically. Mm-hmm. Yeah, because like the lending environment was the thing that created the crisis.
Yeah.
And credit dried up. There was no such thing as credit available. And the only thing that was available were things we weren't used to utilizing. FHA loans, Fannie Mae, which of course is mainstream now.
Yeah.
Right?
Yeah.
But back then it was all private money, which is known as non-QM today. So it's just different, right? So I knew I needed to either reinvent myself, go back to school. I wasn't sure what I was going to do. I just took it upon myself to seek mentorship.
And was that mentor in the form of a lender, or what was that?
Yeah.
Okay.
Yeah. So he had been in the industry for about 20 years at the time I found him.
Okay.
We didn't have really social media back then the way we have it now, so I just found his website online because I was calling guys who looked older than me.
Smart.
Who were still in the industry, asking if they would take me under their wing.
Oh, wow.
Most guys just told me to pound sand.
Really?
They're like, go work for Bank of America, right? And I'm like, I'm not going to do that. That wasn't who I was. I grew up watching my dad as an entrepreneur.
Okay.
I was money motivated, but I was happy to be a commission salesperson. I just needed to be coached.
So you just wanted to work for somebody for free until you earned a commission, and they were still telling you no.
Yeah, correct.
I guess because there weren't a lot of loans to be had. I don't know.
The market was horrible.
Yeah.
My mentor is a very open-hearted man. He took kids off the street. He had some adopted kids. He had his own children, a single dad, and he just had a heart for leadership, mentorship, coaching. So I spent 10 years with him. And I got really, really lucky. That was my hitting the lottery in life.
Oh my gosh,
Finding a man like that who not only taught me how to be a loan officer and prospect and what to say, how to deal with stuff.
Yeah.
He taught me how to be a man, right? He was basically my second father.
Sounds like it. Yeah. That's really lucky.
Yeah.
Yeah.
So if there's any advice that I can give to anybody in the younger person space, find a good mentor. Don't try to reinvent the wheel because that's what's going to change your life.
That's great. Wow. So from there, you were learning from this mentor. And how did we get to JMJ, where you are today?
Yeah. Well, 10 years with a mentor, you're like, oh, okay, you've kind of gotten your 10,000 hours of mastery, but I was still young. I was basically 30-ish, 30s, young 30s. But I knew at that point, I was starting to hit my stride in life, made some money, had some money in the bank, owned a house.
Yeah.
We had some kids, a couple of young kids. My wife was working. And it was time for me to prove to myself what else could I do from there. I've always been the type where I didn't ever want to stay in one role. Once I've mastered something and been in it for that period of time, I want to see what else I can do or what I'm capable of.
Yeah, evolve.
Yeah, evolve, right?
Yeah.
So I wanted to run my own show.
Okay.
And of course, that was 2016, so 9 years ago is my first effort at doing it. And I will tell you, it was very difficult. Yeah, I realized that I sort of bit off more than I could chew, but there was no other way to to try to figure things out, but to jump in. Right? So you're still young enough so where you can kind of fail a little bit, but now there's kids involved, right?
Yeah,
There's
so
a mortgage
added
involved.
Pressure, yes.
There's added pressure.
Yeah.
So on one hand, that's helpful because you're super motivated. On the other hand, it's terrifying because you're responsible for things.
And for you, it wasn't an option to go to like a big lender. You were like, no, I'm not made for that.
No, you know what? I've never been cut out for, like, again, my dad, always self-employed, always a maverick.
Yeah,
big
cool.
Personality, very assertive. So like the idea of taking orders from somebody else
not your jam.
didn't sit well with me. You know,
it.
I'm not cut from that cloth. Not that there's anything wrong with that, but I did want to be in charge. The painful part was just learning how to drive the car, right?
Yeah.
And that took years. I would say I joined JMJ in 2018. We tried a larger company that was more big corporate because I thought maybe the extra bells and whistles and support would help me. It turned out big corporate's just big corporate. It's hard to get anything done, right? So JMJ is boutique. There's 2 owners. It's a privately run company. And if you talk to them, they will tell you we are not scalable, but that's by design.
Okay.
Right? We don't want multiple layers of corporate bureaucracy, middle management. We're not going to be going to sales rallies in Las Vegas. We're not going to be doing hoorah-rah stuff. If you're not already motivated and have a certain level of experience, JMJ is not for you.
You know what they say, though? They say, like, more money, more problems.
Yeah.
So sort of that mindset.
Totally.
Yeah.
Totally. Less is more sometimes.
Yeah.
And in a good way with JMJ, like, I will tell you in my industry, our main referral partner is the real estate agent, right?
Yeah.
And it's a high stakes situation because you know this better than anyone. You get into a 30-day escrow. If it's a competitive situation, you're shortening contingency timeframes. You're shortening the escrow period.
Yeah.
You're also dealing with, and this is natural. You're also dealing with people who are in fight or flight a lot of the time.
Oh, it's very
right?
emotional. Yeah.
Well, how often do people buy homes?
It's
not very often.
every 10 to 15 years, typically.
We deal with seasoned investors, but more often than not, I would say 8 out of 10 of our buyers are regular families.
Right.
In a lot of cases, first-time home buyers.
And a lot of times, even if they've bought before, things have changed. Like if the last time you bought a home was 2004,
it's
look
nothing
how different.
like what it is today.
Yeah, and people don't remember either because it's so chaotic in that phase. You're planning a move, you're planning like all of these changes in your life.
Yeah.
And you're dealing with all this lender paperwork, which has only gotten to be more and more intense.
Yeah.
Yeah.
You almost feel like you're being dragged through the mud when you're getting a loan, and it's not on purpose. But what I'll tell people just to help them understand the 2 different sides of the industry, real estate, mortgage finance. When somebody wants to buy their first home, that is an emotional dream.
Yeah.
Right. There's excitement around that.
Yeah.
We're excited to go on the weekend and visit open houses. We're excited to window shop on Zillow or wherever else.
Right.
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 And that's fun. There's some fun and joy involved in that because it's the emotional thing. You find a property, you get emotionally attached to it. Then reality hits, right? You do need to figure out how you're going to pay for this.
Oh, it's just like vacation. Like the vacation is the dream, but it's the coming home and paying off the credit card.
Bills.
Yeah.
Don't I know it? We just got back from Lake Tahoe. But yeah, that's the hard part. Is the lack of a better way of putting it is. The mortgage part of it is the necessary evil, okay? Not that we're evil, but it's not the fun part. Pushing paperwork for 30 days and financially exposing yourself to somebody, right? Your credit reports being run.
Yeah.
Here's my tax returns, my W-2s, my pay stubs, my bank accounts. You're seeing my transaction histories.
It's very vulnerable.
Here's my ID. Like, there's a certain energy to that, and it's not simple. It's not easy. And then you couple in contracts, real estate contracts, moving dates, contingency timeframes. That's a high stress situation.
Yeah.
So that's where I realized the epiphany that I had in this industry, where everyone, like right now, the trend in the mortgage industry is to go broker. I was a broker for my first 12 years of my career.
Okay.
And I was a broker before it was cool to be a broker. What's going to happen, because we've been dealing with higher for longer interest rates, right? Interest rates have been high for a while now. Eventually, interest rates are going to come down.
Yeah.
People are going to get overly busy. And I experienced that as a broker. And what I realized was all I had access to was an account executive who had the tendency to overpromise and underdeliver.
Mm-hmm.
And I couldn't get to a decision maker. Some underwriter in Michigan's having a bad day and deciding whether or not we're going to close that successfully.
Yeah.
And I can't do that. Like, you can do that when transaction volume's down, like right now.
Yeah, I see what you're
everyone's
saying.
down capacity.
Yeah.
Right? So
Yeah.
here's what's going to happen. Interest rates are going to drop, and everyone who went to the broker trend is going to feel that pain. And I felt that pain for 12 years as I got busier and busier and busier in my career. I was like, this is not sustainable. I need to be able to sleep at night.
Yeah.
I need to be able to retain my relationships. I want my borrowers to like me at the end of the transaction.
Yeah,
right?
for sure.
So for me, the broker piece wasn't sustainable in the long run. So I did the big bells and whistles corporation.
Yeah.
Too much corporate bureaucracy.
Yeah.
Can't get anything done. It's its own set of problems. JMJ is like the Goldilocks, right? It's not too big. We're really fortunate. Our underwriting manager, Tony Kuda, is the nicest man you've ever met. And like the Rain Man of underwriting. Hey, Jason, difficult rescue escrow hits my lap on a Saturday, and he's like, let me figure this out with you. Like the access that we have, the quality of people that we have, the control that we have.
Okay.
Right?
And so that's the business model.
That's the business model, is having complete control. Right?
I know that I can reach out to Jason Thomas, who I work with all the time, and I'm amazed at how quickly he can get me approvals, and it's faster than I would even think to follow up some of the time.
Yeah.
Yeah, because
Exactly.
it's like you said, the expectation.
We're getting ahead of it rather than being in a state of reactivity.
Yeah,
We're
for
trying
sure.
to apologize for not having, oh, well, sorry, it's this appraisal AMC, and we have no control over it. I apologize. We can get an appraisal in 24 hours, right?
Well, and realtors, of course, like that, because what we like to do is we like to serve our clients and make them feel like empowered and that this is going to go through and your team has your back.
Yeah.
And if you're constantly having to, kind of make excuses for why things are happening and why this is, don't worry, or, whatever.
It's a lot.
It doesn't feel good. It also doesn't reflect well on you. And of course, at the end of the day, it makes your clients feel uncomfortable and scared, and they're already emotionally unstable at that point.
Yeah.
Yeah.
So it took 20 years, but I sort of figured out, I'm not saying we have the perfect situation, that we never make mistakes, or even that the broker model hasn't come a long way, right, in improving its situation. But what I'm saying is 20 years worth of trial and error and learning the hard way in a lot of situations. This is the best setup that I've found that allows for a better experience for a realtor, referral partner, or the borrowers to minimize stress as much as possible, because it's such a high stress situation that I don't want to be the one adding to that.
Yeah,
And
for sure.
Yeah, and it also matters how you show up too as a human being, right? Are you adding fuel to the fire when something does go wrong, right? SB 326.
Oh yeah, we love those balcony inspections, and there's more of those to come.
Well, there's things that are out of our control that happen on transactions, and the other piece, like a lot of times you'll get the question from a real estate agent, why should I use JMJ? Why should I use you? And I think the natural response from so many loan officers is, well, I got this gizmo, I got that gadget. And I'm not saying bells and whistles aren't important, because they are, but it's more as the human being, what kind of personal development work have you done to show up in a powerful way that instills confidence with borrowers? Are you adding fuel to the fire of frantic emotional reactivity, or are you a calming force?
That's very important.
Right.
Yeah. If you're going to be the one that's holding their hand, they want to feel like they're holding on to somebody that is going to be able to hold it back.
Right.
Yeah, you don't want to go off the guardrails.
No.
Yeah.
Yeah, like the way Jason Thomas showed up in that transaction had everyone at the end of the transaction saying, oh my God, who is this man? Right.
I know. I mean, obviously they were all emotionally charged because it was a difficult situation beyond everybody's control. But yes, he was the voice of reason.
There was the aha moment, though, for a lot of people, even on the listing side. We didn't work with the Whipple group, and she's like, okay, I want to work with you.
Yeah,
right? Because once people recognize not just that, we close loans well, but how you show up while you're doing it.
Yeah, there's literally somebody on the other side that cares.
Yes,
it's so important.
It's the integrity, it's the deep caring, it's the calming force where you're not jumping into the franticness. That right there is the intangible, the best analogy I can point to is if you hand a race car, a Ferrari, to a 5-year-old and put them on a racetrack, how well is that going to go?
Yeah, not
right? It doesn't, like, people talk about these fancy platforms and these bells and whistles.
Yeah.
But it's the bigger part is who's in the driver's seat.
Yeah.
Right? Like, I could probably win the race against the 5-year-old on the Ferrari with a 1992 Toyota Camry, right?
I think you definitely would. Yes.
So you get the point, right?
Yeah.
Like the human element is what's lost a lot of the time in mortgage and real estate. That people are so transactional, so focused on sales, so focused on X's and O's.
Yeah.
I can close fast. Right, but the integrity piece and the deep caring piece and the showing up powerfully for people is the piece that I think supersedes everything.
Yeah, well, and I guess with all of your experience too, so when somebody comes to you guys and is just so set on an interest rate and comparing you to say the broker or whatever, their bank is throwing at them as baiting them with a lower rate, how do you explain to them that human piece in a way that makes them understand?
Well, that's a tough one.
Yeah, because some people are just so driven by the monthly payment, which is of course a good way to be, because we know what happens if you're not paying attention to the monthly payment. Obviously, the realtors do their part to explain the pros and cons of working with one person versus another, and ultimately it's up to that borrower. But at the same time,
that's a great question.
Yeah.
Let's tackle that together, okay?
Yeah.
So certainly some people are only going to view mortgage as a commodity no matter what, right? There's nothing that you can say. There's no human connection that you can offer that's going to make any difference.
Yeah.
Right? So that is part of the marketplace. But of course, I've had countless stories, where people went after price.
Yeah.
Understandable. I'm not blaming people for that. Okay.
Yeah.
I understand the motivation. 30-year commitment is a long commitment to make that kind of mortgage payment.
Yeah.
Right. But a lot of the time, it's an overpromise, underdeliver, and they can't perform. Right. So we get the frantic phone call. We're famous for rescue escrows and taking over deals because other people aren't performing. Yeah. And that's how we establish a lot of trust in different relationships or new relationships. And it'll be one of those things where a borrower does have their tail between their legs, because I'm telling them, hey, this lender, maybe it's a credit union. Credit unions are not for profit.
Yeah.
It's pretty normal that their rates would be better. Yeah. Right? But on a transaction with a condo, especially first-time home buyer with a lot of difficult moving parts and a situation where they're kind of pushing the envelope on their qualification, we've had so many instances where they went with the better price, and again, no judgment around that, and we get the call 2 weeks into a 21-day escrow help. Right?
Yeah, it happens.
And that does happen. I will also say this. Sometimes a borrower is just really well qualified, really sophisticated, called their bank and has a better rate, and I say you're making the right decision, right? We're not going to be a 10 out of 10 for every single client. And some borrowers will say, Jason, the way you're showing up, the way you communicate, the education you're providing, your accessibility, you just make me feel comfortable. And this lender's a quarter or an eighth of a point higher, I'm still working with you. Sometimes we're better in price. It just, the circumstances range wildly. Well, and there is no one size fits all.
I think that's really a good point to make, because sometimes the banks are sometimes there's a preconception that a certain type of bank is going to offer a lower rate, and that's the way to go. And some of those preconceptions are like either outdated or they're just myths and people are just buying into it. Right. Or heck, maybe they saw it on social media from somebody, right? Like, you're not going to know unless you actually pick up the phone and ask. Yeah. And picking up the phone to ask doesn't necessarily mean you're going to have to give away your social security number right away. Like, at some point you do.
I'm glad you said that. At this point in my career, younger versions of me would be like, no, we need the whole picture, and I need to, before I can tell you anything. This version of me meets clients where they're at. So a lot of people just simply don't want to provide that kind of information up front. They want to have a conversation, get a sense of what our interest rates are, give us enough information to give them some basic feedback. Yeah. And that's fine. Yeah. I'm happy to do that. Right, and lenders should do that when people are window shopping, I think, personally. Yeah, got to make them feel comfortable.
I think it's very similar to saying to somebody who walks, who's looking at properties.
Yeah, so you deal with this too.
Yeah, okay, come in the door, take a look.
Right.
Like, you don't have to just sign the contract and make the offer
yeah.
without seeing what's inside. You know, it's
called soft close.
yeah, that's funny. That is funny.
Yeah.
I was thinking too about what you said before about the interest rates, and you know how there's been that whole phrase out there about like marry the house, date the rate, and all that. But really, with a lender, you're kind of you mentioned about making a 30-year commitment with a loan, right? Like, that is a big commitment. It's hard enough for people to figure out who they're going to marry, right? You do have to date around, and I'm not saying like date a bunch of different lenders, but talk to some.
Yeah.
And figure out what's actually in your best interest.
Totally.
And I know yesterday I posted a video about buy downs. Jason and I talk about buy downs all the time. And you know, they're kind of a difficult concept to get, I think. Like, there's so much talk about it, but if you're not really paying attention, it could go right over your head. Yeah. But if you actually educate and show examples, it makes a lot of sense. I mean, if you're in the mortgage industry and you're probably like, what is she talking about?
Well,
it's easy,
what you're
but
pointing to is the fact that like lenders have a tendency to use acronyms like DTI, APR,
I use
LTV,
them too,
right?
EMD. Yeah, people are like,
and people just don't like COE, EOI, evidence of insurance. Like, the problem is, one of my loan officers had to remind me of this on a recent podcast we did together, where I'm like, you're absolutely right.
Yeah.
We're under the impression that, you know, first-time home buyers especially, or even more seasoned buyers, speak this language, and
even
they don't.
FHA and VA.
Yeah.
I mean, we say it all.
They don't know what that is.
I know, and I mean, we speak real estate. Like, it's a different language.
It is.
Yeah.
Yeah, so you really have to understand that and help dilute it down.
Yeah.
And not because they're not sophisticated, but this is not what they do for a living. And they do one of these transactions every, let's call it 5 to 10 years.
Yeah.
So why would they be experts? Just like we're not experts at what they do for a living.
Exactly.
Right?
Yeah.
Yes. So and this is going back to the human understanding of what we're doing here. It's not just a transaction. Don't rattle off things to sound cool. Make sure they're actually grasping the information.
Exactly.
Right?
Yeah.
And that's where you start to really form a bond with the client, is what I'm talking about.
Yeah.
Right? Because it's less about interest rate, which of course we're always going to provide a great price.
Yeah.
Right? We're going to do our very best to do that while still keeping our doors open and able to provide for our family. It's a dance.
Yeah.
But both can be true and happen at the same time, I think.
Yeah. Well, and you know, in this world, because there are so many different lenders and mortgage providers, it would be very unscrupulous for a lender to grossly overcharge.
Yeah.
I mean, it's
you're gonna talk yourself out of business quick. You know, reputations spread quickly.
Yeah.
And it's just not the way to do it. If you have integrity, you provide a good price at a good value, and you do your job well, and you're going to be well taken care of.
Yeah.
Yeah.
I think the other thing that I see a lot of is buyers that get scared because they rush too quickly. They get excited too fast to potentially buy a home, and they don't really sit down. I mean, we're in such a fast-paced world right now, so people just don't take the time to really analyze things.
Emotional reactivity.
Yeah, exactly.
Yeah.
And so they get into a pinch where they're like, oh, wow, if I'm going to make this decision, I have to make it now, and if not, then I'm going to sign another year lease.
Yes.
And while that might feel safe, that may not be in their best interest for the long term.
Sometimes, especially with first-time home buyers, they need a push. They do. Not like an annoying or obnoxious push, a gentle nudge in the right direction, because the reality is they're terrified, and rightfully so. I'll tell you one thing from personal experience, okay?
Yeah.
I was with my wife before kids. This was in 2010.
Okay.
We had Jack at 2011, so right before we started having kids.
Yeah.
We were in Santa Barbara wine country on a weekend getaway, which of course is what married couples do without kids all the time. And my realtor called me after we had made an offer, and they accepted the offer. And I was not happy. I was terrified.
Buyer's remorse.
Right? I was
yes. It's totally normal.
Can we jump out of it? Can I talk myself out of this? And like it ruined my weekend, by the way. Because I'm in
really
Santa Barbara
stressed.
wine country, and now oh my God, it's real. At the time, 2010, it was like $3,500 a month for an FHA loan. And I was used to making a $1,500 a month rent payment in 2010.
Yeah.
Okay? So, or whatever it was, $1,795 maybe. My mentor looked at me and he said, "You're going to be fine."
Yeah.
And he pushed me, and he's like, just buy the house, okay? And guess what? I lived to tell the tale.
Right.
And that $540,000 house in Fountain Valley, 3-bedroom, 2-bath, starter home, like the bathrooms were the size of small cubicles, right?
Yeah.
Original condition. It's like today it's worth like $1.35 million.
Yeah.
Right. And so who knows what the market's going to continue to do long run, but generally speaking, you can count on homes appreciating over time. Yeah. And I'm not saying set yourself up for financial failure or push the envelope. I'm a big believer, by the way, in stepping stone properties, especially for first-time home buyers. You don't need to buy the bougie bungalow in Costa Mesa as your first home. If you've got generational wealth and it's a different story, that is amazing. But the people that don't, who feel pressure to like go really far with their first purchase, dial it back. It's okay.
It's a really good way, yes, to do the stepping stones to increase the down payment that you'll have for your next property. Yeah, absolutely. I mean, my first place was a condo in Costa Mesa. Bought it in 2008, I believe. So like right when everything was kind of going not so good.
Yeah.
And it was very questionable. Is this the right decision? And I remember, taking the plunge, and I did one of the things that I hate when clients do this now, but as soon as we got our offer accepted, I mean, we moved forward, but every day I was checking out the competition, like the grass is always greener, looking to see, did we make the wrong choice? Should we jump out while we still can? We didn't. We stuck with it. Fortunately, every other property on the market was like a short sale.
Yes.
So we didn't really want to wait that long because it was so questionable.
But you were still questioning. There's a bit of paralysis by analysis.
There is.
And there's some fear involved.
Yeah.
It's totally understandable.
And even after we bought it, one of those great companies out there that tracks your home values will send you updates every month telling you the value. Yes, and it went down like 60,000, which when you're like 26 is like
terrifying.
That's like what we bought, our down payment.
You probably had some sleepless nights.
You're just wondering, did we do the right thing? But at the end of the day, we did great. I mean, so it worked out. And like you said, unless obviously there are always going to be times when it may not be the right decision for you. Like you said, if you're overstretching. It's tough to time the market. So let's talk about that real quick. Timing the market, and people get really, I get it because I did that. You did that. It's a very natural thing, especially when you're young. You don't have the life experience yet. But time in the market heals all. Right? And this idea that you're going to time the market perfectly. And I guess I would understand more if you're a fix and flip investor or a buy and hold investor of multifamily or something like that. You need to be a little more savvy about what market conditions are doing. People get really, in my opinion, it's just my opinion, it's not right or wrong, it's just my opinion, people forget that number one, your primary residence is your home first before it's an investment. Okay, and I'm not saying over time real estate's not going to appreciate, because we know it is. But
you made out fine on that home even though you started down. Right. This is what people forget: not having to deal with your landlord, getting to put the kind of carpet you want in, hanging Christmas lights during Christmas, hosting a Super Bowl Sunday party, hosting your first Thanksgiving, having your first child in that home, your dog. These are the things that should supersede whether or not the market's going to go up or down in the next year. Okay?
Plus, and on top of that, either way, you would be paying for something to live in, unless you are living for free somewhere, which...
Yeah, sure, living with family, but I guarantee you first-time home buyer listening to this right now, when you're living with mom and dad at 20-something years old after college with a job, the last thing you want to be doing is living with your mom and dad. Right? So... Again, not trying to push people out way past their comfort zone or have them buy more than they're comfortable buying, but fear is not the thing that should decide whether or not you buy a home.
I think that's exactly the point we're trying to make, is that a lot of people do feel sort of hopeless because it's expensive, rates are high, these are facts. But we're here to tell you that there are opportunities and ways to go about it that you just may not know about. It's a school of life.
We do need to say that who you hire matters. Right. The harsh reality is, I'm not sure if this is a good or a bad thing. I'm not a fan. The barrier to entry in our industry is very low.
Our industry is for sure.
there's an incredible amount of amazing human beings and professionals in our industry.
Yeah.
But it's also the 80-20 rule, and I would argue that it's more like the 90-10 rule in real estate and mortgage. And you know, whether or not you hire correctly in the form of a Holly McDonald on the real estate side or over here with JMJ can really decide one way or the other what your experience is like, whether or not you end up with the right house, their ability to negotiate on your behalf and represent you appropriately, right? Like
definitely.
all of those things can be potentially catastrophic if you're just hiring somebody who dabbles in the space.
Yeah, that's so true. That is so true. And a lot of people have been weeded out, you know, just like they were weeded out in 2008 from the mortgage industry.
Yeah, it's no longer easy.
Yes. So before we wrap up, I just want to touch upon Costa Mesa just very briefly.
Sure.
So your office here is in Huntington. You live locally. Your children go to school in Costa Mesa.
Yes, they do.
They go to the Waldorf school. And that is such an incredible place.
Yeah.
I met a lot of nice families from there.
It's a great community.
Yeah.
It really is.
It's different. Like it just, again, it provides options for people.
It does.
Yeah.
Yeah, we wanted to give our kids a slightly different experience. We are going to, because it's K through 8, and in fact, it's actually K through 12. But we're going to give them a proper high school experience at a public school. We're not sure if it's going to be Edison or Huntington High yet.
Yeah.
But we wanted them to have a different experience K through 8. And if you don't know about Waldorf, I'm not going to, make you a disciple right now or anything, but it's been around for over 100 years, I believe.
I think so.
It originated in Europe. And it's just a different experience. There's no screens, there's no iPads. You're right on the Costa Mesa Bluffs.
It's so pretty there.
They're constantly doing walks down into the park area, into the bluffs. They're big on hiking and outdoor stuff. When you walk into the school, you'll see goats, you'll see chickens. They're learning wood shop in grade school.
Yeah.
They're learning Mandarin and Spanish, Espanol in grade school. Everything is hands-on. They're doing community service over the summer. Like it's a very, very different experience than they're learning to knit and sew.
Yeah.
Like the concept, the most simple way I know how to put Waldorf philosophy is when they're through the end of their academic career with Waldorf, they want to know that child is not just good at taking a standardized test. Okay, they are independent adults with grit.
Yep.
Okay, they know how to be self-sufficient. They're not reliant upon a system. They got this.
Yeah,
right? That's what Waldorf is trying to do.
Lots of different experiences that you don't necessarily get, especially in the younger ages.
Right.
Yeah, so they get to, I don't want to say be a kid longer, but they're getting to do different things that a lot of children.
No homework until the 5th grade.
Oh, they are getting to be a
Same
kid longer.
teacher until the 8th grade.
Yeah. No, I mean, it's really an incredible place that a lot of people don't know about, don't even know it's an option, and I
remember sitting down in 1st grade with homework for hours. And even then I was like, what is this? Why are they torturing me? Right? And I thought about, the blue whatever schools, the public schools, and I sat down with a teacher who I respect, and I got nothing against public school. They're going to a public school in high school. But I knew just in the childhood phase, I didn't want to bog them down. Yeah. Right? I wanted them to have an opportunity to be kids. Yeah. Right? And they're still doing work and projects and all this stuff. Yeah. But sitting down and doing repetitive math in 2nd grade for 2 hours after school. Yeah. It's nothing that really called to me personally, and I didn't want my kids to experience that until they were ready to do that and a little bit older. Yeah, no, my daughter, when she was in TK would have homework. Yeah. And kindergarten, they had a pretty good amount of homework. Yeah. I mean, thinking back, obviously it was a while ago, but I don't really remember having much homework until about 2nd or 3rd grade. Yes. Yeah. Yes. I can't. And I mean, even just the length of the school day is so much longer than I remember. It's a lot. So everything's about we need to prepare them for college. We need to prepare them for college, and I'm like, do we? By at 2nd grade, 3rd grade? Yeah, I mean, it'll be interesting just to see how the educational system, I think it's going through a transformation right now. Yeah. I don't know how long that's going to take, but I'm still a big believer in college and networking and alumni and all those things. Yeah. I'm still a believer in that, but it's becoming a little bit less of a holy grail. Yeah. Because people are realizing at the end of the day, if you don't have the independent grit, doesn't matter how fancy your degree is.
Yeah, you definitely need to be motivated on your own accord, because even if you have all of the skills but you're not motivated, you're not going to do a good job.
Correct.
Yeah.
Yeah.
That's like we talked about before. So, well, Jason, it was lovely having you.
Fun.
Yes, it was so great. So everybody, if you need any sort of financial guidance, you need a lender, reach out to Jason and his team here at JMJ Financial.
Thank you so much, Holly.
Thank you.
Appreciate you having me. Bye, everybody.